Hello everyone, I hope you are all well and having a good weekend so far. Just a quick video, I'm going to have a little look at the ATR and how I use it to place my stop losses. I was having a chat with Ilyas earlier this week, and we just thought it might be a nice idea to have a slightly different market approach on the YouTube channel, perhaps using some slightly different tools that we haven't covered before, provide a little bit more value to you guys, something that perhaps you can integrate into your trading. Before we get into the video, just to note, we are funding traders with up to 300k. So if you're a trader that's looking for a little bit more extra funding, it's a perfect opportunity for those of you who are looking to make the jump to full-time trading, perhaps looking for that little bit of extra capital to manage to enable you to do so. Do get in contact with us. We're happy to provide more info. We work on a 50-50 profit share, 100-to-1 leverage, and yeah, we can do up to 3 100k accounts per trader. We are, of course, also still running our account management service, so if you are looking to perhaps have someone manage your account for you, we've got some fantastic returns, so do drop us a message, and we're happy to provide a little bit more information about that. Cool. Apart from that, let's get straight into it. So just to provide a little bit more info on the ATR. The ATR is essentially an indicator that measures the range of the market, the volatility, basically in simple terms how volatile the market is at a certain time. It is, of course, a lagging indicator, so as you can see, as I move my mouse along here, the value is changing. It's not a predictive indicator, it's based off past data. You can see I've got mine set to 7 and RMA smoothing. And essentially, when I'm using the ATR, all I'm looking to do is, as I'm placing a trade, so I found my entry, so if I zoom in on one of these here, if I use the replay feature quickly and drop down onto the 15-minute time frame, the ATR is also time frame specific, so you're looking at, obviously the value here is 0.0008. I'm not sure if you guys can see that, and if I jump onto the 1 hour, you can see that the value has changed. It's now 0.00122. So it's a great tool in terms of, depending on what time frame you're looking to take your position on, you can sort of integrate it into your trading plan, so that you're being a bit more dynamic with your stops. I see a lot of people using the fixed SLs of sort of 10-15 pips, depending on obviously what time frame you're trading on and what your rules are. The ATR essentially adds this more dynamic approach to stop loss placement, where you can try and tailor your stops based on the volatility in the market. So obviously, if the market's slightly more volatile, for example, if we look here, you can see we're at 2 AM here, so this is in the Asian session when we know there's not as much volatility. The ATR is much lower, we're at around 0.0003 here, and if we move over into sort of the London and then starting to encroach on the New York session, you can see how the ATR is increasing. Looking at the size of these candles, we can see they're much bigger than the ones in the Asian session, so there's clearly a lot more market volatility here. And essentially what the ATR does is, if I'm taking a trade, for example this one here, where I'm looking at, say, okay, I'm looking at the fib retracement, and I'm looking to take a trade off this zone, whereas a lot of people would use a fixed stop loss of, say, 10-15 pips, what I can then do is take the ATR a couple of a candle before my entry, and use the ATR to place my stop loss so that it's in tune with the market. So depending on how volatile the market is, I'll have a stop loss that's tailored to that. So if I take an example, if I drop down onto the 5-minute time frame. Cool. So looking at this position here, the lower time frames, the ATR can be really quite useful, because by tailoring our stops and adapting them to the market volatility, when I'm using a low a stop loss with a low number of pips, an extra few pips can be really quite significant in terms of affecting my risk to reward. So you'll see that's a 12 pip stop loss there. If I bring it down to an 8, the risk reward is severely affected. So this is where the ATR can be really quite useful, really quite prominent in terms of making your strategy a lot more profitable. So looking at this trade here, I'm looking at a sell position. I've had my limit order here in the 786 with the nice supply zone here, and to give you an example of how I'm using the ATR, so obviously I've used a limit order here. If you were entering in as market execution, what you can do is just take the ATR at that time. So for example, if I'm pressing sell now, the ATR is 0.00057. And the way I'm using the ATR is I'm just using it to give that breathing room outside my zone. So I'm taking this trade based off of this zone that's confluencing with this fit. So what I use the ATR for is, in my eyes, if price is going to violate this zone, my trade is no longer valid. I'm looking at this zone as a bounce zone. I want it to rally up into this zone and then continue downwards in its downtrend and make a new lower low. So it acts almost as a value to give a set amount of breathing room for this zone, depending on market conditions. So because I'm using a limit order, I'm using the ATR for this candle here before I was wicked into the trade. So I've got a value of 0.0054. So what I do is I look at the top of my zone, and because if it goes above this zone, I'm looking. I don't want to be in this position anymore because it's violated my zone. It's running through. What I do is I use the ATR to allow that breathing room. So I'm going to add 0.0054 on top of this zone. So if I do that now, it would be 8, 9. So it would be 1.3299 if my maths is correct. 5, 4, yeah. Looking about 90. And you can see here how I've given my trade adequate breathing room outside this zone. And then if I just obviously press play here, this is obviously a replay trade feature, so I know what happens. And you can see how price didn't in fact violate this zone very much. In this scenario, we rallied up into this zone and then continued on downwards. But hopefully it's clear to see how I'm using the ATR to then to tailor my stop losses and how I'm placing them, based off the ATR. I'll find a buy example for you now as well. Cool. So just looking at a buy example quickly as well. So as per my my strategy, we're looking. I'm looking at this 618 retracement. I've got a nice zone. I'm looking to take it off. I'm personally using limit orders. And if I just identify how I've used the ATR in this example as well, hopefully it will give you a clear example in how I'm using them. So obviously in a sell position we're looking for above the zone. In a buy position we would therefore be looking for below the zone. I'll chart it up quickly now for you. So we've got the ATR down here at 0.00020. So I'm going to place my stop loss 0.00020 below the bottom of my zone. So that would be 1.32003. And you can see how I've tailored my stop loss. There's clearly not a lot of market volatility here. The market's clearly a little bit calmer. And I've tailored my stop loss to match those conditions, and then we can see this one did in fact actually take profit as well. Obviously I took these trades last week. I picked these out on purpose just to show you guys. But the key thing here is that if the market does go against me and my trade does hit stop loss, the idea is that more often than not the market's going to continue going downwards, and that's where how we're using the ATR to ensure that we're placing our stops based off the volatility in the markets. And I want to know that if the market does continue down and hit my stop loss, that it's not a case of I'm going to get wicked out and then continue upwards. More often, obviously that will happen sometimes, but more often than not, I'm looking for enough breathing room on this trade to give this zone enough of a chance to let it do what I want to do, which is have price bounce from it and then continue in the direction that I'm taking the trade.